Good night everyone, today is Tuesday, 9:20 around 9 p.m. New York time, and we're gonna go with the daily technical video today. Guys, very simple. We're gonna start with the most clear structure in the market, and I believe that this tonight is gonna be the Aussie dollar. The Aussie dollar, if you guys see right here, it shows 1, 2, 3, 4, 5. This is 1, A, B, Z, and a double zigzag, and then it shows a clear 1, 2, 3, 4, 5. In an Elliott Wave principle, after 5-way move that we see in here in the Aussie dollar, it comes a 3 ways back. Okay, that 3-way back consists of 1, 2, 3, which is also most of the times an AVZ, that is a 5, 3, 5 move. That being the case, all we need to care now is that the Aussie is showing a recovery possible in 3-way that should take Aussie minimum to 104.50 area. Now, having seen that and knowing that, we need to care about this area right here and see which structure we have right there. When we go to the Aussie in a 1-hour chart, we see that the Aussie did a 1, a 2, a 3, a 4, 5 swings in a wave 1 diagonal, or swing overlapping. Wave 1 allowed the overlapping. What you're expecting back is 1, 2, 3, 4, 5. This is A. We are in B, and we should get a C wave lower to either 102.10 or 101.84. Now, knowing that, what's telling me is that the dollar that we're predicting is gonna get in some degrees strong before get weak later on during the day or tomorrow after the fake news at 2 p.m. New York time. So technically this is the path for tonight: dollar strength, dollar weakness. Now, knowing that path, we're gonna move on pretty fast right here, and let's go to the euro dollar. What we see in the euro dollar as a principle, like we explained today on the forums, we got different scenarios for the euro dollar. One of them, and this is the one that we're showing, do not mean necessary that needs to be this one, is showing a 1, 2, 3, 4, when 4 took away of a triangle right here. You got A, B, C, D, E, and then that being the case, we see the euro trading to 137.60 area and then dropping in 3 before going higher. If you take a look at that, that goes pretty well with the pattern that we have in Aussie, when it is dollar strength before weakness. Looks like cable, it has something similar there. From the lows, it looks like cable is doing 1, 2, 3, 4, 5 as a leading diagonal, so and it's the same pattern at the end. Then we have the dollar CAD, which we believe, and we really don't care in the dollar CAD what the CAD is doing outside this structure. All we care on the cap is 1, 2, 3, 4, and 5. What it is the pattern: dollar strength, dollar weakness. That's how, guys, you can understand how this market works. This market works as simple as this. You need to correlate the patterns, and then you need to find the ways within the markets to make all the patterns works. Now, if we take a look now to another pairs on closest, let's start with the euro pound. What the euro pound is showing is right here, and like we've been saying that the euro pound needs to trade to 86.26 area, and then that's gonna require an euro weakness. That is what we're expecting to happen before the euro get stronger than the pound right there. Another pair very interesting is the Euro CAD, when we have what it looks to be a 5-way move ending pretty close. Let me see the RSI. Look, we're getting divergency on the high. So right here was a nest. It was a nest right here technically. So we ending wave 5, and we should get lower from there in 3 before going higher. Another one is the Euro Yen. Let me see the Euro Yen, what it's doing tonight. We believe that the Euro Yen, and this is very clear, is a 1, 2, 3, 4, and it's gonna end around 103. A 5-way pattern here, and another 5 ways, 1, 2, 3, 4, 5, higher degree. So that's calling for the rebounds on the euro. So it comes gold now, when we still have the two possibilities that we were playing, either the triangle or either 1, 2, 3, 4, 5, when gold is gonna test around 1754 area before going higher. Then the S&P is very interesting tonight. Why? Because the S&P, it took the high right here, proving that this is corrective, and then after taking the high, got a high of 220.06, 220.39, so it took the high margin away. What we're expecting in the S&P is possible a flat B lower to take the dollar higher tomorrow before the news, and possible after the news we can see a move higher in risk for the rest of the week, and that's gonna take euro dollar higher, dollar CAD lower. That's gonna take all those pairs in that degree, in that Aussie to 104, dollar CAD lowers to around 96.50. So that's the path, guys. It's very easy, it's very clear right there, and it's the same path that we have proposing since last seminar on Sunday, when we say that the risk is gonna be strong off, then it's gonna bounce, and then off, and that's exactly what the market is doing. Finally, we're gonna take a look to the dollar index right here and oil. The dollar index as euro, as you guys know, most of the times they're about the same. It looks like it's doing a 1, 2, 3, 4, 5 as a leading diagonal. That, and then after that ender right here, it's like we are over here, and then we're gonna get 3 backs and then lower. So technically, another way to call it is as it's laboring right here, and we did it on purpose. So you see in one, you see the euro can be labored same way. When you have from the top, this is the 135.85 on the euro. You got 1, 2, 3 legs. That's W. Then A B, a C, and another 3 leg lower to complete the whole correlation. But seeing the magnitude of this move, we believe that the leading diagonal is most likely. And then finally, and in the 8 hour on the dollar index, still same scenario. We still expecting the dollar index to trade lower to around 75.50, 75 area before it bounce. But remember that yesterday we are presenting in a scenario when we have 1, 2, 3, 4, 5 being that this low is the 3802 of this move, just in case. And then oil, again, the same wedgie. The wedgie is being tested, and I gotta be honest with you guys. It's being tested in a degree that is losing. This is too deep in my opinion now to be a wedgie, but we can call it many ways. We can call this like ABC, this being W, and then or something like that. I mean, what really matters, guys, is this. You got 1, 2, 3 swing onto here. You got a 4, then you got a 6, you got a 5, a 6, a 7, 8, 9. You got 9 swings, but these two, they are corrective. So technically you need it. I mean, you got 1, 2, 3, 4, 5, 6, 7, 8. Another swing can be labeled as a leading diagonal in oil, but let me see, this was 90.52, this was 90.48, so technically this is another swing. So you got 10 swings, you need an 11 swing to complete the move and being corrective. The inside labeling can be many things. It can be like A, B, C, W, S, and then you can call this like an A, and then from here you can say like B, and then B now, B here, and then A, B, and less in degree, and now we're gonna go higher. I mean, don't as far as now, all you need to worry about it is that you need one more high to complete 11 swing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11, which is corrective, and then from there you're gonna be able to see a decline in oil. Alright, guys, so let's leave it there. For tomorrow, what we are expecting is yen's trend, dollar's trend. Also we are expecting yen's trend, dollar's trend, oil possible lower before higher. For me, the area around this low is crucial right here, which is 83.47, and that's what we leave. After the news, if the market stay as it is right now, we're expecting higher risk. Okay, guys, get back to you guys later. Thanks.